Hello there, so how much money do you need to be able to retire? In today's video, I'll answer that question with you. I'll give you a link to a download to a free retirement calculator that I've created. I'll then go through that calculator with you and we'll be able to work out exactly what your budget should be each year in order to live the lifestyle that you desire in your retirement, be that an early retirement if you're someone who's going for financial freedom, or if it's a retirement at the normal stage of life, that's absolutely fine as well. This calculator covers both of those eventualities. It not only helps you to create a budget so that you can see how much money you need on a weekly, monthly and yearly basis, but it also lets you know what your financial freedom or retirement figure is so that you know exactly how much money you need to have saved up in order to have that invested to be able to live off for your retirement ongoing indefinitely. And that's the purpose of the calculator. It will even allow you to see the number broken down. So for each individual expense, it will say, this is the amount of money you need to set aside in order to pay for that aspect of your living. So it's really quite fun in that respect. I've even added in a tax calculator so that it can calculate how much tax you should be setting aside, because a lot of people do overlook that when planning for retirement. If you're new to this channel, welcome. My name's Andy, and on this channel I like to talk about money and success. If you're interested in making, saving or investing money, please be sure to hit that subscribe button down below, hit the notification bell, and then you'll get notified every time I release a new video. And if you enjoy this content and find it useful, please do remember to hit the thumbs up, because that helps the YouTube algorithm, which in turn helps me, and I do appreciate it. When planning retirement, I like to work things backwards. So I like to start by looking at how much I think my standard of living is going to cost. And if I'm honest, that's exactly why I created this calculator, and I'm now sharing it with you guys so that you can do the same. I work things backwards. I call it reverse engineering, whereby you look at what the cost is going to be, then you total up how much your living costs are, and then from that work out how much you need to have invested in order to live at that standard of living. And that's exactly what the calculator does. And without further ado, let's take a look at the calculator. Now, I will give you a link to the calculator in the description down below. So if you head down there, you'll be able to click that link and download this calculator and work along with me. There'll be a link back to this video from within the calculator as well once you upload it. So you'll be able to click back to this video and go through it together with me at the same time. And if you have any questions or if you have any suggestions on how I can improve this calculator, please leave me a comment down below and let me know. I'll be happy to answer any questions. And likewise, if you've got any suggestions on how I can improve it and maybe make a version 2.0, please let me know and I may well add those improvements in. But for now, let's look at the calculator. So it all starts on this left-hand side here, whereby you fill in the blue cells. It's really simple. You just need to fill in what your monthly costs are for each of the items listed. Now then, if we've got items there that you don't have on this left-hand side, any of those you can change. So you, for example, may not have an electric bill. I think that's unlikely, but you might not. You might not have a landline, but you might have something else. So you could just change that cell for whatever you want. Just type in there whatever it's going to be. That's absolutely fine. Don't change anything in this column here, which is column D. If I move this down, you'll be able to see. So don't move anything in the weekly column, and don't change anything in the yearly column either. All you need to do is fill out the monthly column here. So let's run through doing that now. So your grocery bill. So let's assume that you're spending £500 a month, and that's to cover your groceries, your toiletries and laundry. You'll notice that the minute you fill that box out, it populates the weekly cell and the yearly cell. I put the weekly cell on there so that you can see as a sense check how much it is. So for example, if you were to put £100 a month in here, you have to ask yourself, really, can you live on £23 or $23 a month if you're doing this from America? You need to think, is that a realistic figure? If it's not a realistic figure, then you're gonna need to increase your monthly figure. For now, I'm just gonna put £500 in there. Now then, obviously you're gonna have some kind of rent or mortgage payment. You might not. You may be someone who's paid their mortgage off. That might be one of your goals before you retire. I'm gonna assume you have, so I'm gonna put that to 0. You're gonna obviously live in a building of some description. If you own the building, you'll have some kind of buildings insurance. Let's assume that's £30 a month. And some kind of contents insurance. Let's assume that's £20 a month. You'll have a mobile phone, presumably. That's gonna cost you, say, £30 a month on your contract. Then you're gonna presumably need clothes. Now, Don't be tempted to put nothing in the clothes section, because bear in mind that your shoes will wear out, your coats eventually will get worn. In 10 years time, that coat you're wearing, that pair of jeans you're wearing now won't be wearable anymore. So you do need some kind of budget in place to be able to pay for new clothes. So I urge you to put something in there. Don't be tempted to just put zero in there and think that you can live without ever replacing your clothes. It's not realistic. You have to be realistic when doing this. So for argument's sake, I'm just going to put 40 in there for now. Now you can see that's £480 per year, or £9.23 per week. Now I've got a Christmas, birthdays or gifts cell. So the way to calculate this is literally add up everybody you would buy presents for, add up how much you would pay for their presents, and then total that number up over the year, divide it by 12, and that will give you the figure to put into this box here. For now, I'm just going to put 40. Electric, put 30. Gas or heating fuel if you haven't got gas where you live, presumably. But again, you might just have electric heating, in which case you could have put zero in there. You'll have a water bill. You need to put something aside for that. Council tax, or if you're not in the UK, some kind of property tax. So put in whatever that's going to be per month. If you have a telephone landline, put in how much that costs you. And if you have broadband, put in however much that costs you. And you'll see that gives us your total essential living cost, but that's not everything that it costs for you to live. You also have to consider your travel expenses. So we'll go through that next. So your travel expenses, if you're someone who uses public transport, then put how much you use in there. If, however, you've got a car, a bike or a van or a different vehicle for getting around, put the amount you pay each month as a replacement fund for that. I may well make a separate video for how to cost replacing a car, but if you've bought a car, understand in 20 years time, it's going to be defunct. You'll have to replace it. It's definitely not going to last for 20 years. It may last 10 years, but in 20 years time, the odds are something's going to have gone wrong beyond repair. So you need a fund set aside. Now it might be that it's someone who's leasing a car, in which case in this cell, you just put the amount that you would be paying to the lease company to essentially rent the car. And that's fine, but put in this cell something, okay? Be it the amount you're going to put aside for replacing it, or the amount you're going to put aside for paying a lease. Now I have made a video how to manage your money, which I'll put a link to up there and in the description down below. That literally talks about savings accounts and setting money aside for things like this. If you haven't watched that video, I would urge that you do watch that video. It will explain about setting up different savings accounts and whatnot. We've got a whole savings section to get through in a moment, and if you was to watch that video, that will help with that. So vehicle, car, let's assume you're putting aside 200 per month for that. Fuel, let's assume that's 50 per month. Car insurance, let's assume that's 35 per month. MOT, let's assume that's 15 per month. Road tax, let's call that 10. And repairs and maintenance fund. So as your car breaks down, keeping it going, replacing the tires, replacing the exhaust, the light bulbs, things that wear and tear, that break, you need a fund for replacing that. Your tires will need replacing every 10,000 or so miles and so on. So you need a fund set aside for that. Put something in there. Okay, so just 2 more sections left to go, then you've completed your budget. So entertainment and leisure. So how much money are you going to set aside for holidays? Personally, I like a lot of holidays. We were speaking, me and my wife, just recently. We could easily spend 10,000 a year on holidays. We like going on the cruises. If you saw my previous video about Carnival Cruise, I'll put a link up there and in the description down below. You'll see that I like going on cruises, and they're not a cheap hobby to be passing your time with. But it is great fun, and who wants to retire and do nothing? What's the point? You know, you want to retire and you want to live a little. So this section really allows you to set aside the money that you're going to set aside for living like that. Now then, obviously I've put there quite a high budget. You might not have such a high budget for savings. Weekends away, you might do a couple of weekends away a year, a few big holidays and a couple of weekends away a year. So maybe set a little bit aside for that. Dates, restaurants, takeaways, how much you're going to spend each month on those things. So decide about that. Cinema, do you go to the cinema? Do you need to set some money aside for going to the cinema every now and then? TV license. Do you have Netflix? If you have Netflix, you need to put something in this box. I mean, like I said, these cells here, you can change any of these. So it may be you've got recurring costs that you do for your leisure that aren't TV orientated, but this covers pretty much all the TV things I could think of. So if you've got Netflix, if you've got Amazon Prime, if you've got Disney Plus, if you've got HBO Max, if you've got a gym subscription. I actually have a home gym, so I don't need that. I don't have HBO Max either. I don't have the Disney Channel, Disney Plus. Then if you've got hobbies, you could put in however much you want to spend on your hobbies, and I've just put hobby 1 or hobby 2. So however much money your hobbies cost you, if you're in a particular club or there's something you do regularly that costs some money, what are you setting aside for that hobby? So it might be £50 a month for one of the hobbies, and the other hobby might be £200 a month, who knows? So now you can see the total cost of your entertainment and leisure. And then finally, we've got a savings and finance section. In this section, we're covering all the things you need savings for. So we've got home and repairs, improvements, DIY fund. So this should be one savings account. So for repairs of your home. So you've got the money set aside for keeping your home up to date. In 25 years time, for example, you may well want to replace your kitchen. You might feel you need to replace your carpets every few years and things like that. So by having this DIY fund, you've got the money set aside to get those things done. Whatever it is that those things happen to be it replacing the carpets, be it repainting, be it putting up a new fence because the one you've got in the garden at the moment's gone rotten and fallen down. Whatever it is, this money set aside allows you to do that without going, oh my God, I've got not enough money to do it. This allows you to think that far ahead, and that's the purpose of carrying out this budget. So think carefully about what items you are likely to have cost-wise in the future and set that money aside. Make sure you've got a budget for that to be regularly saved. Put 250 in that one. An emergency fund. If you don't know what an emergency fund is, watch my video there, what is an emergency fund and why you need one. I'll put a link up there and in the description down below. But everybody should have an emergency fund because there's always going to be unforeseen things. Even with the best will in the world and having multiple savings accounts set up for specific items, there's always going to be that one item that you just didn't think of, that even I didn't think of. I'm terribly sorry, folks, but this is your little catch-all. So by having the emergency account, you've got that safety net there. If something goes wrong, you've got that to fall back on. You should at least get 3 months worth of saving in your emergency account, ideally more. Setting aside an amount that you're going to save regularly into your savings account. Even once you've hit your 3 months amount, save a little bit into there so that it's continually growing. For the sake of this, I'm just going to put £50 a month into there for now. General savings, obviously it's what it says on the tin, so this is your general savings account, so whatever you're going to put into that each month. Tax savings account, I'll come back to that later because we've got a tax calculator that's going to explain to you how to work out what tax to put in there, because you are going to need to set some tax aside because your income is going to be taxed. So when we get to the end, we get your financial freedom figure. That will then generate an income for you. That income will be taxed, and you need to know how much to save in order to pay the tax man, because once you're retired, it's not going to be stopped at source like it is when you have a job. So we'll come back to that in a moment. Tech replacement fund. Now, this fund really is just for replacing things like your TVs, your mobiles, your iPads, your laptops. Those things will go obsolete over time. That laptop you're looking at right now, watching this YouTube video on, or the mobile phone or the iPad you're watching it on, in 10 years time, that piece of tech will be obsolete. You will at that point want to replace it. And if you haven't planned and set aside some money to be able to do so, you'll be sorry. So the whole purpose of this fund is to set that money aside. So you kind of need to work out how much money you're likely to spend on tech, how frequently you're going to adjust and update your tech, and as a result of that you can work out backwards how much you should be putting into this particular cell now, and therefore saving. For now, I'm just going to put 200 per month into it. Loan repayments, hopefully you haven't got any loans, but if you have, there's a cell for that there. And then wealth fund for investments. I really do encourage you to have something go into your wealth fund. Even when you're retired, you should be aiming to grow your wealth. My logic being that if your return on investment falls for some reason, having the ability to grow that fund counters that. It also helps to counteract inflation. You've got to bear in mind the cost of living is going to go up. If you remember 30 years ago, the cost of everything was a lot less than it is in today's money. And in the future, fast forward 30 years, that case will be the same. You need to account for that. By having this wealth fund, it allows you to continually add to your investment pot and making it essentially bigger and bigger than you actually need, which in turn allows you to make sure that your standard of living is secured. And that's really what this is for. It's to ring fence that, to either ensure that you can maintain it or ideally continually improve it. And wouldn't that be good if you could retire and then continually be improving your standard of living? Now, my personal target, I like to try to save half of everything I earn. So my total savings section in this section of the spreadsheet would be about 50%. Your reinvestment section, I would say aim for about 25%. That'd be amazing if you could do that. If you can't do that, maybe just 10% is fine. For now, I'm just going to choose a figure at random and plonk it in there. But this is a cell that you really want to put some serious consideration into. So wealth investment fund, let's assume £400 per month. So now if we look at this bottom section here, you can see all of the totals of each of those 4 sections. So your essential living costs total £11,520 per year. Your total travel expenses total £4,020 per year. Your entertainment and leisure totals £14,700 per year, and your savings totals £12,000 per year. Now obviously yours will be different. If you've been filling this out as you've been watching the video, the number you will come up to will be different to the number I've come up to almost certainly, and that's absolutely fine. There's nothing wrong with that. So now let's have a look and see how you know how much money you need in order to live this lifestyle. So your total figure, if we scroll across to the right, is £914,285.71, or if it's in dollars, that's fine, doesn't matter where you are in the world. Now this right hand column here, you will see each one of these numbers is the amount of money you would need to pay for that lifestyle. So if I highlight that entire row there, you can see, so your Christmas gifts, in order to save £480 per year or £40 per month for gifts, you need £10,389.61 set aside. Now that's assuming that your yield on your investments is 4.62%. You can change this figure. So if your return on your investment is 3%, you change that and all of this column here updates. So if we scroll right to the bottom now, you'll see that that's increased your total return, your total number, your financial freedom number that you need is now 1.4 million. So it's got a lot bigger simply because we've made this yield on investments smaller. Now let me show you a little yield table that I've created and hidden in this on a separate tab, which allows you to see how much you would need for different returns on different investment amounts. So let me show you that now, and then we'll carry on playing with it a second, then we'll go on to the tax section. Now if you go to the bottom, you can click on this tab here that says yield table. The yield table literally shows you 2 columns. So you've got one column which talks about the yield or return on investment, that's what ROI stands for, and the other column then calculates the capital required at that return on investment or yield. So for example, if your yield was 2%, the capital you would need to live at the amount of money you're looking at in this budget over here, which was the 42,240, you would need 2.1 million. Whereas if you had a yield of 7.5%, you would only need 563,200. If you could get a yield of 12%, you'd only need £352,000 or dollars if it's the US. So that gives you an idea of how this cell affects the capital required. So you'll notice we put 3% on the budget planner and it came up with 1.4 million. But if we were to put 5.5 in there, it'd come up with 768. So you see it's 1.4 million here, because it says 3 at the top. But if I put 5.5, scroll down, 768. So it really does depend on what return on investment you're actually getting. So when I talk about the yield on stocks and shares, the dividend yield, this is what we're talking about. If you've got a high dividend yield, then you can essentially draw more money out of that stock. But bear in mind that stock could go down in value. And there are things called dividend yield traps. So you can go for something thinking it's a high yield and actually it's about to be cut and become a much lower income or stopped altogether. So you have to be wary when looking at that. Most experts seem to agree that you should be aiming for 4% as your amount to be drawing. 3% is extra prudent. If you're taking 3% out, you should, in theory, your pot should last forever. So if we turn that back to 3% on this calculator, we're back to our 1.4 million that would be required in order to sustain this lifestyle ongoing indefinitely. Now, it may well be that you're able to achieve a better rate of return than that, in which case you could increase your wealth amount that you're saving. You could come back to this calculator and work it out backwards and actually give yourself a pay rise, which wouldn't that be nice in retirement, having a pay rise? Now, one thing we have missed here is the tax calculation, and I have made a tax calculator which is included in this spreadsheet, so I will show you that right now. So you need to put a certain amount aside for tax because you are going to be ending up paying tax. So to calculate the tax that goes in that cell, go to the bottom. We're going to be making our income from dividends. So click on the UK Dividends Tax Calculator. You'll notice I've made two tabs here. One is for income tax, one is for dividend tax. We're clicking on the Dividends Tax Calculator. This tab really is only for UK residents. I'm sorry if you're looking at this from elsewhere in the world, you'll have to work out what your tax rules are in your part of the world. I'm in the UK, so I've worked it out for the UK. Now then, this cell here, you'll notice has nothing in it. This cell has a figure in it. This cell has nothing in it. The reason for that is that you've made less than 50,000. If you remember when we go back to the monthly budget, that figure there is less than 50,000. And because of that, there's no tax to pay because you're under the £50,000 threshold there. The reason there's no tax to pay on the 0 to 14,500 is because you've got a £12,500 personal allowance, and then in addition to that you've got a £2,000 dividend allowance as well. You add those two together and that makes the 4,500. Now bear in mind, I am not an accountant, I'm also not a financial advisor, so you will need to check with an accountant to make sure that you get these taxes correct for you, for your own personal circumstances, because say you have income from other sources, say you have it from a property, maybe you've got a rental property, you'll be able to deduct some of your costs from that as well. So, you know, check with an accountant to make sure that you've got this right. Like I say, I'm not an accountant, but this will give you a good indication. If all your income is from dividends, then hopefully this will be pretty close for you, okay? So it'll give you an idea of what you are actually aiming for, and at least it'll make sure you're setting something aside for tax. So this says £173.38. So if I click back to the budget and I go back and I put that into here, it will be wrong. So I'm going to put it a little bit higher. I've cheated. I know what it's going to come out at. So 188. And if you go back, you'll see it increases this to 187.48. So that's close enough for me. But basically you have to jump backwards and forwards until you figure it out. You'll notice there's two links on here. One will take you to the government website where you can literally see what the tax bands are for income tax. And you can see personal allowance 12,500, 0% band, basic rate 20% band, higher rate. Bear in mind this is for income tax. If we go to dividend tax, which was the other link on the spreadsheet, it tells you there you've got your £2,000 allowance, and 2,000 plus 12,500 makes 14,000. And then here it tells you what the bands are for the dividend allowance tax rates. And that is what I have based this calculator on. So I hope that makes sense. Now then, once you've done that, you can go back to your monthly budget, and if you look on the right hand side here, you can see your financial freedom figure is 1.4 million. Now if you could make your return on investment a little bit better, so instead of being 3%, say you could make it 5%, now that will make a big difference. You now only need 889,920 to be able to live on this amount of income every year passively. So hopefully you can now see why I'm such a big fan of dividend investing, because the dividends generally get increased year on year. So if I can get myself some stocks and shares with a dividend of say 4% or 5% even, and knowing that them dividends are going to increase, my return on my initial investment increases. I've made a video about that, compounding. I'll put a link up there and in the description down below so you can check that out. And that increases over time, which would obviously help to pay for my lifestyle in retirement, completely 100% passive. Anyway, I hope you found this video useful. If you did, great. If you've got any suggestions how I can improve things, let me know in the comments down below. If you've got any questions, let me know them in the comments down below and I'll be happy to help. Other than that, thank you so much for watching, and bye bye.